Asian markets largely higher, barring Hang Seng.
Absolute serene results from IndusInd Bank.
We are seeing a pickup in demand that has been surprising.
The upside level for the Nifty would come in at 19,900.
They have also initiated coverage in SJVN with a target price of 55.
60 points higher now on the Nifty, up at that 19,800 perch.
Indian markets as well as the global markets have been driven primarily by an avalanche of liquidity.
This was the best ever first quarter performance of the company in its history.
So Titagarh Rail Systems today, HSBC has initiated coverage on the stock.
If rice prices are falling a lot, it is actually a big concern because then our incomes start to fall.
We've come off from the day's high, so the Nifty slipped close to about 75 points from the top.
Looking at mainly a digital platform to reach out to customers.
More than 150 people have lost their lives across North India.
The markets 18 points higher on the Nifty. We, of course, open higher, and we've seen a fall from there as well.
Well, that's the day so far. You're with us here on another edition of Closing Bell. We are coming to you live, as always, from the CNBC-TV18 Multiplex studios. And I'm Prashant. With me, my colleagues Rima and Surabhi here. And Nigel, of course, is joining us from the newsroom floor. Guys, hi. Good afternoon. It is a quiet session, right, Rima?
Slowish session, right? Started off with more promise.
Started with more promise. But, you know, nothing to complain because the Nifty is quiet. But I think this qualifies as a good session because you look at the Bank Nifty, you look at the kind of stocks which are going up, SBI, above 600, Bajaj Finance, HDFC, Kotak. Bank Nifty itself, by the way, has got about 0.5% or so. It's just the Nifty, which is, neither here nor there. Look at broader markets, mid-cap, small caps. Market breadth is positive, and I think between the mid and small cap indices, there are gains of between 0.5 and 0.7%. So you just got like 1 day of halt yesterday there. But things are back up nicely once again. It's not exuberant. It's not, just completely one-sided. There's stuff on the downside as well, but that's to be expected. But it's a okay session. It's a good session, notwithstanding the lackluster showing on the Nifty. Rima.
Just talking about the individual movers, the Nifty PSU banking index is doing pretty well. So that's up close to about 1.5%. IT continues to see some sluggishness for the second consecutive day. So profit booking visible in large cap IT names like Infi, TCS, and the IT index itself is down close to about 0.3%. But there have been a few mid-cap earnings, and they've looked pretty good. Pull up something like a Premier Explosives. The stock has been an outperformer last 1 year, up 150%. And today, post numbers, the stock has gained another 10% in trades. Very, very good numbers coming through from Premier Explosives. Another one, which we'll talk about, Nugent Software. The stock rocketed up 9 to 10%, and now it's cooled off a bit, but still up 4%. Growth rates at 33% on a year-on-year basis. This is the best that we've seen in the last many, many quarters. Bank of Maharashtra, the first of the PSU banking numbers, have also been pretty good. Asset quality improvement. The net interest margins have actually gone up on a quarter-on-quarter basis. So private or PSU banks, the earnings and the expectations were so high, but all of them have actually met those expectations.
Well, at least so far so good. And barring markets, sort of quibble with the federal, everything else has been pretty well received so far. IndusInd Bank, of course, keeping the flag flying high for the Nifty. Actually, it is the banks which are offering that counterweight to IT, and they're doing a good job of it, at least as of now. The Bank Nifty is up about 0.4%. And apart from IndusInd, you have some other names like Kotak Mahindra Bank, HDFC Bank itself, which is offering a good counterbalance. Of course, we'll talk about NTPC as we go along. That's the Nifty winner today, and that's because of a new note that's come in from one of the foreign brokerages. And you'll be hearing more about that as we go ahead on the show. But the mid-cap screen is actually, looking fairly robust. We've got a 0.5% gain on the mid-cap index. The advanced decline ratio is quite strong. You've got almost 1,700 stocks that are advancing. And I'll just take some names. By the way, this report, this power sector report from Goldman Sachs that's powered up NTPC, it has also powered up SJVN. Just some examples of where the mid-cap action is today. So that's one stock that's heading higher. In terms of stocks moving on news, you have some of the other names as well. For instance, Titagarh Rail System. There's a HSBC note on that one. which is up and about. Tata Power is negative. The reason we've put it in that list is because that was also part of the report, though Goldman is negative on Tata Power. Titagarh Rail is moving on a different note from HSBC. But even beyond this, I mean, so many movers and shakers. KEI Industries, maybe it's Polycab's earnings that have really rubbed off very well on KEI, which is up about 5.5%. Saregama, lots of names, Vesuvius. So mid-caps, small caps. I think the stock selection is going on absolutely as usual. But Nigel, I guess for the index, at the index level, it is a little bit of consolidation, and maybe that's not such a bad thing.
Well, indeed, not such a bad thing at all. In fact, in our morning chat that we put out, when market starts, we were mentioning this, that maybe some kind of consolidation would be good. And the Nifty Bank, that needs to get past the 46,000 odd mark. Otherwise, that part of the market may not contribute too much. We'll require something special for the Nifty Bank to get past that. Positioning as of now is that 46,100 odd, gets protected from the bearish perspective. On the Nifty, for the second day running, taking some money off the table, from the highs that we see in the first hour has not been such a bad thing. So let's see how we end up today. But otherwise, both the days we've come off considerably. So let's see how this goes for the next coming days. But maybe, in fact, getting towards the 20,000 odd mark, it appears there is some bit of, consolidation or maybe a bit of a pull down may not be such a bad thing. How do you position yourself, though, for the final hour of trade? Well, let's get in our expert. I think Mitesh joins us to help us out with exactly that. Hi, Mitesh. Good afternoon. Well, it's a decent trading session. Not too bad. Nifty Bank up 170 points. Nifty up close to 35, 40 points odd. After the kind of run we have had, well, this is par for the course. How do you approach trade?
Good afternoon, Nigel. I think while it's not a bad market, I think there's clearly some loss of momentum, I would say, around the 19,800 mark. So I think it's a market you would want to trade stocks that are showing momentum, and maybe on the index just hold on to your position, don't add. As you rightly highlighted, the Bank Nifty, I think I would want to see it get past 45,800, 900 zones. I think that could possibly add some sort of momentum. With IndusInd Bank numbers, there was some hope that we'll see some kind of follow through to the buying which happened day before yesterday, but that hasn't been the case. So it's a very flat kind of a Bank Nifty index. So for the time being, trading with some stock biases, I have a buy on a couple of IT names, and that's where the momentum is. So Infosys is a buy with a stop below levels of 21.05 for targets of 22.45, and also buy on LTTS, which is largely into technology services, which I would recommend buying with a stop just below levels of 4,100 for targets of 43.25.
Okay, Infosys has not really participated in any IT up move over the last 1 year because more than 50% of its revenues comes in from the banking space, which has been affected by the banking crisis. So numbers for Infosys have also been weak. I think 2 consecutive quarters of a revenue decline, and this one could be the third. Let's get chatting about Polycab. That's buzzing on the back of strong Q1 numbers. Surbi joins in with details on the brokerage calls post the numbers. We also had a chat with the management, so she'll give us an indication of what the management had to tell us, and the other company, the other wire companies that are reacting and seeing a rub-off impact from Polycab. Surbi.
Thanks so much for that. So, Polycab's declared the results yesterday, and the management indicated today that they have seen a volume growth in the range of 50 to 60% and a value growth of 50% this quarter. On back of that, some brokerages have also upgraded the stock. So, we have Jefferies, which said that Q1 was an all-round beat. They have a buy rating with a target price of 48.35. They are valuing the company at 33 times FY25 PE and expecting a 17% revenue compounded growth and a 26% of PAT growth in the next 3 financial years. They see that the target PE as a 20% premium due to the ramp up in the FMEG segment, and also they expect revival in the capex on the capex front, and also expect the housing theme to play out. Morgan Stanley has also upgraded it to overweight with a target price of 48.68. They expect their earnings estimate to be anywhere between 6 to 13% over the next 2 years, and they are valuing the company at 40 times FY25 PE. Now, on the back of these strong numbers, other wire companies like KEI, Finolex Cables are also buzzing in trade today. Now, the expectations are that cables and wires industry will see a volume growth of 15% on a year-on-year basis this quarter, and the volume growth will come on the back of healthy B2B demand. So, order book from the B2B segment is going to be strong, and also the real estate demand is picking up. Analysts estimate that KEI, the revenues will see a growth of around 12% with an EBITDA margin expansion of 50 to 70 basis points. And Finolex will see a revenue growth of nearly 10% with an EBITDA margin expansion of anywhere between 80 to 100 basis points.
Okay, got that. So that is the view that's coming in on some of the wires and cables companies. Havells has also been buzzing, and that is set to report numbers tomorrow. So, Surabhi, run us through the expectations here.
So Havells has been buzzing in trade for the last 2 days. So we had a brokerage upgrade by UBS yesterday, and today Motilal Oswal reinitiated coverage on that stock with a buy rating and a target price of 1580. Now they are expected to declare results tomorrow, and over there as well the revenue expectations are pretty strong, up about 7%. The EBITDA expectations is up 30%, margin expansion of nearly 200 basis points. Also because they had a lower base, so that also will be factored in. The revenues in cables and wires segments are expected to be higher, but the Lloyd, which is the AC segment, is expected to be a little muted, so that will offset, and they might not see a revenue growth as strong as Polycab, but still strong to, high single to low double-digit growth.
Okay, thanks very much for that. So that's a whole primer on cables and wires. A lot of excitement and a lot of action in that space. Prakash Dewan is now joining us. Prakash, good afternoon. Thanks for joining in. This is a space you realize when you anecdotally speak to people has done wonders for a lot of people. KEI and Polycab come up quite often in conversations, but and they are well discovered. Havells, of course, maybe there were some missteps with Lloyds, etc. over the last couple of years. Perhaps that's one reason why Polycab has done so well. But Surabhi also highlighted many other names, right? Smaller wire and cable companies. Anything you track there, and what is still attractive, in your opinion?
Good afternoon, Prashant. So you're absolutely right. I think between the two Surabhis, we covered quite a bit of what's happening in the sector that's keeping it a buzz. But, interestingly, just because they have also started fashionably getting classified as FMEG, there is this whole expectation that this is a space that will probably, or that should warrant very, very rich valuations. 40 times FY25, I really feel this is something which is a sign of a little bit of exuberance. I'm not taking away the fact that Polycab is a great business, very strong presence, great pricing power. But end of the day, you actually have, it's all pegged on underlying growth in the real estate sector. Now, if that is a sector that's booming, fair enough, you have a rub-off effect on all the consumables in that space. But if that were to stop, can you give 40 times to a real estate business that keeps on growing? You can't. So, there needs to be some sort of a method in the madness, if you ask me, in this space. I wouldn't recommend any of the names in this. And there are small players which are fundamentally very strong. They have strong balance sheets. They can grow. Headroom for growth is there. So the valuations are too stretched for comfort, Prashant. So I would refrain from taking into that space at this point in time. And the market's giving you that semblance that anything that's even half code is probably getting rewarded very amply and generously from a valuation perspective. So give it some time. Let earnings catch up with this whole rush in valuations. Then probably it won't make sense.
Hi Prakash, good afternoon. Prakash, we have a couple of big releases in the next few days, and PVR is up close to around 2%. What's the view on that one?
Yeah, so I think, Nigel, it's very clear. There is a comeback that, multiplexes are seeming to make. And given the dominant market share the presence that they have, you will now start seeing all of that positively translate into the P&L. And this clarity on the GST incidents, whether you book F&B along with the ticket or you buy it in store, so that all of that will kind of, start getting some more clarity in terms of what you could expect in terms of the earnings trajectory. I think it's good times. But then, we've seen in the past some of these big releases also end up getting to be some damn squibs at times. Not all of them, but at times there could be disappointment. So I won't write too much on that, but structurally, yes, it's getting in place. And at some point, PVR also will probably become the proxy to that entertainment media spend trajectory that will improve. And it's only going to improve from here on, in spite of the fact that it's become quite expensive. But then there are still takers for this price point as well. So we'll see that growth. but don't expect fireworks just because there's a release. There's anticipation, but wait for it to actually translate into numbers, Nigel. That's what I would recommend.
Mission Impossible, which released, I think, last week, is getting pretty good, reviews and bookings. So that's something that the street is going to be watching. And the end of this Friday, you've got Barbie and Oppenheimer, but the following Friday, you also have that Karan Johar release, Rocky and Rani Ki Prem Kahani, I think. So July potentially, Prakash could be a big one.
Rima has got her, I think, Friday plans booked up for the next couple of weeks. She's got the calendar absolutely spot on. You're watching all of them, Rima?
No.
Okay.
I think she's watching that Karan.
I'm gonna watch Oppenheimer.
Okay.
Okay, let's get into a very short break. We'll come back and invite our Alpha Manager for the day, Rajesh Kothari of Alpha Accurate Advisors, on the other side. Welcome back. One stock on our radar right now is Newgen Software. Now, the company reported numbers some time back. Now, this is a product company. It largely caters to the banking sector, which contributes about 2/3 of its overall revenues. Now, because it's a product company and not a services company, we look at the growth rates on a year-on-year basis. And they're looking up. Look at their revenue growth on a year-on-year basis. It's been consistently moving up. And this quarter, Revenues have gone up by 33% on a year-on-year basis. Quarter on quarter, if you look at the numbers, you will see a very sharp drop in revenues, and that's because Q4 is typically the strongest and Q1 is the leanest. But margins too have improved on a year-on-year basis. Quarter on quarter, again, because Q4 is so seasonally strong, you will see the drop. But if you look at the numbers on a year-on-year basis, margins have expanded, and that's resulted in a profit jump of nearly 57%. Typically, margins in Q1 are low, and then they recover through the course of the year. Now, the stock has also done pretty well. It's up 85% since the beginning of the year, because despite being a banking product company, it's been unaffected by the banking crisis, because unlike the service companies, it doesn't get a very large portion from the US, North America, for instance. Only 25% of its revenues comes in from United States. It largely gets from India as well as the Middle East. So India and Middle East combined contributes about 60% plus to its overall revenues. Growth rates for the company have also been ticking up, and in the last conference call, the company had kind of indicated that historical growth rates above 20% should continue. Q1 has started off on a very strong note, so which is why the stock has gained in trade despite the up move that we had seen in the run-up to the numbers. Prakash, do you look at Newgen Software, and in the banking product company, you also have competition, right? Like an Intellect, Design Arena, etc. How would you rate Newgen versus the others? And what's the big differentiation between the two?
Okay, so that's an interesting, important question. What's the differentiation? What's the secret sauce that's working for Newgen? I think it's their ability to be able to provide very customized solution even for small values, small contract values. It's not something which they need to kind of look at taking on only if it's very large and significant across the value chain. So, one of the reasons why the Gulf, why the MENA market has started kind of performing for them or contributing along with the Indian listing was the maximum number of fintech platforms that are getting integrated to the banking side, the formal banking operations is huge, and they have a interface that solves all of those problems. So, I remember you pointed this out about 3-4 months back when they were when they had announced a lot of new products, which they were new suites that they were launching in some of these markets, and all of those have started yielding results. So I think it's a wonderful business. You could probably look at something what FSL used to be earlier, First Source Limited. I'm talking about 2-3 years back when they started carving a very strong niche for themselves in the BFSI stroke healthcare interface. So that's what Newgen is doing, and I don't see any reason why it won't continue to grow at a very healthy organic pace from here on as well.
Okay, all right. Thanks a lot, Prakash. I think we got you in a bit of a scratchy line. We'll talk to you soon, and thanks so much for joining in and giving us reviews on a whole host of stocks. Well, past stocks, they're in focus on the back of a Goldman Sachs note. Nimesh told us earlier today about some of these stocks. NTPC is up close to around 30%, SJVN as well as up close to around 70% in the last 1 year or so. So what's powering them ahead? Nimesh, tell us more about this note.
Well, actually, today's move is largely on the back of the Goldman Sachs note, where they've written about the entire power sector. It's a large 60-page report. They've detailed about a lot of companies, but within that, they've identified 3 companies wherein they've initiated coverage. The first is NTPC with a buy rating, target price of 265, a potential 40% upside from current levels. The second stock that they have initiated is SJVN. There they have a target price of 55, and interestingly, a sell on Tata Power with a target price of 190. Now, coming to NTPC first, they believe that NTPC is going to be emerge as a winner in the renewable energy transition, largely on back of structural advantage that the company has because of the low cost of debt, as well as that's going to be a big moat for them. And secondly, with peak rising peak shortages, it will re-rate the thermal business as well for NTPC. So that's the broad reason why they like NTPC. As far as SJVN is concerned, they believe that what they like is the exponential growth that the company will see in the renewable energy portfolio on the back of low cost of debt. Additionally, in the near term, from an earnings perspective, 2 of the large plants are getting commissioned, so that's going to add to the numbers as well going forward, and that's the reason why they like the near-term earnings story as well. Also, materially, there is going to be a big impact in terms of earnings going forward, both from the hydro as well as the pumped hydro project. So that again is going to add to the earnings, and that's why they believe that earnings could be quite strong for SJVN. Now, coming to Tata Power, specifically on why they have a sell rating on that stock, A, the valuation is a little expensive, and B, they believe that the near-term earnings will get impacted because the global coal prices have fallen sharply. So that upside won't come from the Indonesian subsidiary. And secondly, the RE business catalyst is pretty much been played out when they sold stake in that business. So large part of the good news seems to be priced in Tata Power, and hence a sell call, but big upgrades on both NTPC and SJVN from Goldman Sachs. So that's the positive side of it, Nigel. I also wanted to add the shareholding pattern. If you look at the holdings of both these two companies, NTPC and SJVN, the free float is quite low, and that's something one need to take care of. Like if you look at NTPC first, the promoter holding is close to 51%. The mutual funds combined own close to 20%, insurance companies 8%, and FIs close to 15%. So net 95% of the float is between between government and the larger institutions. So there is hardly 4-5% float. Similarly, in case of SJVN, the promoter holding is as high as 86%. So obviously, going forward, there could be a risk of an OFS as well, because they'll have to come to the 75% holding. So that promoter is 86, mutual funds and insurance companies own 4, and FIs own close to 1.5%. So even in SJVN, close to 96% is with some large institutions. So again, for both NTPC and SJVN, the key risk is the low float. But the fact is that there is such a large opportunity. The addressable market is quite large, and that's what Goldman Sachs lies. And they've initiated buy on both NTPC and SJVN today.
Okay, all right, got that. Thanks very much, Nimesh. Indeed, these stocks have been up and about all through the session today. Let's take the conversation forward. Rajesh Kothari, Managing Director at Alf Accurate Advisors, is with us now. Rajesh, good afternoon. Great to have you on the show as always. So actually, let's start with the space, since these stocks are sort of the market focus and there's so much of enthusiasm around them. How do you look at the power space? And it's a long chain. You could look at generators. I mean, we've seen what's happened to the smart meter stocks. They've gone through the roof. You can look at different parts, or you could look at the capital goods companies like a BHEL. Does any of this interest you? Anything in the entire power chain?
Oh, yes. So, we have been bullish on this power chain from almost like, I would say, 2.5, 3 years. And as you rightly say, power gen is just not only about the generation company. In fact, we do not hold any generation company, we do not hold any distribution company, and companies basically where ROEs are suppressed, am I right? And the growth is very, very limited. We rather prefer to basically buy the businesses where there is a product portfolio. So there are many companies in India, particularly the multinationals which are listed in India, they are basically into the distribution reform side of it. So power efficiency, the smart grid, for example, the data centers, they are going to go around 5 times in 5 years. Now somebody has to supply the power stations for them, correct? And many such ancillary players, which are actually very large players globally, and they are listed, of course, in India. And those are the companies what we have already been bullish from last almost 2.5, 3 years. And I think the growth is going to be very strong for many of these companies. They are really technology driven. The product portfolio is very, very high. And the growth incrementally is coming from the space where I would say the competition is very limited. There are probably hardly 4 or 5 players in this kind of a space which can basically meet the requirements of the customers. And I think those space, we are seeing very strong growth in last 2 years, and I think that will continue over next 2, 3, 4 years.
Rajesh, afternoon. Have you been a long-term investor in Reliance Industries? Because the stock for very long didn't do anything. It was underperforming. But then of late, the investor interest in Reliance Industries has gone up. The company is moving to monetize its holding, break up its business, unlock value. And there are a few who believe that the downgrade cycle in terms of earnings is behind Reliance and an upgrade cycle is likely to begin. Can you tell us how you've been feeling about Reliance, and has it been a long-term holding for you?
Yeah, we do hold this company, without going into stock specific, I think there are several parts to this entire company. It is one is, of course, the traditional business, and second is the new business. And the good part of this company is the traditional business is a huge cash cow, and that cash cow is now creating the future cash cows. That's how I look at this company, because it is a really, in terms of the sum of parts, each part is becoming like the core business 10 years back. If you split this company into segment A, B, C, D, and probably the D and E, which are the new businesses, they are going to create value equivalent to business A, almost it was 10 years back. So this company, like many other multi-baggers in India, these are the firms typically, they're the traits of creating another company within the company, size of your main business. So say, for example, the largest retail company in India, for example, has created a second format in retail which is equal to their parent format 4 years back. And in 4 years, they have doubled the size of their company. So I think these are the typical traits of any large, what I would say, the dominant player with a very strong cash flow. And this company is also not an exception to it. So yes, we do own it. Of course, not a very large percentage of the portfolio, but small percentage of the portfolio. But we remain positive on this name with a 3, 4, 5 years.
Okay, hi Rajesh, good afternoon. Well, as we speak, Reliance Industries, in fact, it was trading mildly in the red. It's moved back into the green. So there is some investor interest ahead of that big event that we'll see tomorrow. And ITC as well, that's another stock that's moved up. Rajesh, in the last couple of months, there's been a big party. Whether you look at the mid and small cap space as well as the large caps as well have done pretty well. Any stock that you can share where you all have built onto a position or maybe a fresh entry?
Well, Nigel, I think, as we discussed last time, the 3 C's on which we remain bullish. Unfortunately, I can't discuss stocks because of a lot of regulations, but the 3 C's, those 3 C's remains the same. So one is capital goods. We are extremely bullish on this theme. And if you look at our fact sheet, in our budding beast, we are holding almost 25-27% in capital goods. And in our main IOP also, we hold 14-15% in capital goods. Second C is for credit. We are very positive on the overall credit cycle. And within banking and finance, we think NBFC will do better compared to banks. We are bullish, of course, on both banks and NBFC. This is a second holding for our main flagship plan, almost 29% of the portfolio for IOP. And the third C stands for consumer. And like I said last time, that third C is where we have been adding in last 2-3 months in particular, because we believe that the gross margin is going to expand because the raw material cycle is now going to be in your favor. The commodity prices are cooling down, and which is good for many companies, be it a consumer FMCG, staples, or be it a discretionary. And on the other hand, the rural economy is going to do well because the MSP price has been good support from government. And of course, this being election year anyway, rural India normally does well in this kind of years. So demand is going to revive, which will lead to better revenue growth, and margins are going to expand, which will result into better profit growth. So we are positive on the third C as well. So these are the 3 C's on which we are extremely bullish. And I think that we still continue to see a lot of opportunities. Contrary to general myth that market has gone up, we don't think so. We believe the valuations are still, we are equal to last 10 years. And 10 years average PE for a country which is growing at 15% in terms of the corporate earnings growth, I think it's a reasonable PE, if you ask my personal view. So we remain bullish on the market, and we believe that probably the better days are yet to come.
Rajesh, hi, afternoon. Now, one name where there has been a fair bit of chatter for a while is ITC. The stock's done very well. And the talk is that there perhaps will be a plan to demerge the hotels business out of the company. Some value unlocking. Long awaited, but I think now some serious expectations here. Not asking you whether one should buy or sell, but just purely if you've looked at it, do you think the price for ITC factors in any such corporate action, if it were to happen, if you've looked at it?
I would refrain from commenting on this name, but I can tell you only one thing, that every year, twice at least, we see this rumors in not only this name, but in many other companies where, every 6 months we get the same news. From last 10 years, it has been there. We hope some serious unlocking happens for the minority shareholders.
No, that is true. But do you have a view in terms of whether this the current price factors?
Yeah, we unfortunately would not like to.
I see that you own Chola Finance. I mean, just to move on, have you looked at the holding company, Rajesh? Chola Holdings, which is also listed, which is also done well, but still a big discount. And the primary investment is Chola Finance. Yeah.
Correct. You are right. So I think that's true for many holding companies, not only for this group, but there are many other companies where the holding companies are trading at significant discount compared to the intrinsic value. Of course, then there are pros and cons. The positive side is you are getting something at a huge discount compared to your intrinsic value. But the negative side is that being a holding company, their objective is to how they can grow their value over a longer period of time. Am I right? And at times we have seen in many group companies, I'm not talking about this name, but there are many others names where the capital allocation decisions are taken. Am I right? And at times it may not be suitable for the minority shareholders, particularly with a view to 2, 3, 4, 5 years. And therefore, we believe that it is always better to play the direct businesses which we understand and which we like, rather than playing through the holding company. So normally speaking, we avoid the holding companies buy. We prefer to buy the businesses which we understand and which we like.
Okay, all right. Got that, Rajesh. Thank you very much for joining in. Always a pleasure speaking with you. We will take a quick break, and as always, we will get you a check on what dealing rooms are saying in our special segment, D Street Chatter.
You're watching us here on Mad About Markets, and we have a guest in the studio immediately.
Well, that's on top of your hand, or on top of our minds rather today.
Mind. It is the drone sector that we're talking about today.
And it's really taking off, and we're going to tell you why and the size of the opportunity today here on Mad About Markets.
Welcome back. Well, the markets are making a bit of a charge again to the high point of the day. Remember, in the first hour itself, we hit that high and then we came off the top. In fact, we went into the red as well. But as we speak, making a bit of a charge, ITC is one of the key reasons why, we are moving up. And the Nifty Bank that was up close to 200 points, it's on its way to around a 300-point gain. Also, good move out there. It'll be good if we can end virtually at the high point of the day. But it's a good time to move to our special segment, D Street Chatter. Nimesh joins me. Nimesh, what are you picking up? I mean, it's a good-looking screen.
It's a good day of trade. In fact, market refuses to fall, right? Yeah. And that we've been saying this for many days now. A lot of investors are cautious. A lot of opinion are like on a cautious side. But because of the liquidity, markets tend to go up, and that's been the trend today as well. Every day you're seeing one of the two large companies taking leadership and going up. So that's playing out clearly. Even in terms of flows, again, my sense is though the flows are mixed, but with a positive bias. For a change, in terms of sector churn, looks like there is a bit of focus back in the NBFC names. So a lot of the NBFC stocks are buzzing in trade today. The sector which is consistently done well this week and for the last many days is technology. Even in today's trade, I understand tech stocks are well bid by the larger institutions. So, and remember, this is one space which is relatively under-owned by the larger institutions. So some bit of catch-up is happening in terms of rotational trade there as well. The good part is not only the Nifty is doing well, but even the broader markets have done relatively well today. I guess some reaction to individual companies' earnings as well. So earnings is going to be a big theme that's going to dominate the near-term trend. But I guess the momentum is clearly with the bulls, and that's largely because some of the large caps are supporting the bulls on the upside.
Yeah, I know, and the next couple of days we'll have ICICI Bank and Kotak Mahindra Bank as well, those two big banks, so we'll have to see how the Nifty bank swings along. But Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, the first stock on my list is Voltas. Almost at 52-week low, stock is relatively underperformed. Looks like large part of the selling from a leading FI seems to be largely over now. That's the overall feedback. And in fact, in the last couple of days, I understand a domestic mutual fund has done active buy, so some bit of support coming in Voltas at lower levels. So that's the first one. The second stock is Stovecraft. Again, this is one stock almost at 52-week lows, been consolidating in a very narrow range for the last many weeks now. I understand even in Stovecraft for the last couple of days, some small blocks are changing hands, and I believe one of the domestic PMS is active buyer in Stovecraft in those block deals. So maybe the disclosures could be important there. The third stock is Spandana. Again, every now and then you keep hearing about a large block in Spandana coming up. Remember, the promoter needs to sell out the entire stake, so that buzz keeps coming in. And again, there is an indication that maybe that large block can come very soon in Spandana Spurti. And the last stock is Tube Investments. Marginally under pressure today. The stock has been a huge outperformer in the last many months. And again, at close to 52-week highs. I understand there's going to be a book build where a large FI is likely to sell by a block deal. So probably watch out for large block in Tube Investment very soon. So that's my last stock on the list.
Nimish, thanks very much. Interesting list as always. Stovecraft, Voltas, Tube, some of the names which Nimish highlights. Well, Mitesh is with us to run us through what he's making of the trade so far and some BDST trades. Mitesh, over to you.
Yeah, Prashant, good pickup in the index as well as some of the financial names. So Bajaj Finserv are doing very well. So Bajaj Finserv is something which I would recommend as a BTST trade. Take along with the stop below 1630, look for a 1670, 75 kind of a target, and eventually it can go even higher from those levels. And the other one which I like is Trent, which is a BTST with a stop at about levels of, or rather a short-term buy with a stop at about 1700 for targets of 1750.
Okay, got that. Mitesh, thanks very much for the calls of the hour. With that, let's shift our focus to the special earnings segment, Earnings Corner. In the segment, we will tell you what are the key earnings to track for the rest of the week. To name a few for today, from the financial services space, L&T Finance will release numbers. The other big one will be Tata Communications. Tomorrow, that is on the 20th of July, we have HUL, Infosys, Coforge, and Persistent Systems that will be reporting numbers. On Friday, July 21, the big boy Reliance will be tracked for numbers. Besides other numbers of companies like Ashok Leyland, HDFC Life, JSW Steel, Hindustan Zinc, and Ultratech Cement. Finally, on Saturday, two top private banking players, ICICI Bank and Kotak Mahindra Bank, will release their Q1 numbers. Okay, well, so let's look at some of the key expectations coming in from HUL, because that's the B that we're watching out for tomorrow. Manglam is here with the poll. What do the numbers say in terms of the poll, and what are the broader expectations from the company?
Well, more of the same in this quarter for HUL this time around. The seed of gradual recovery that was planted in the previous quarter, let's hope that blooms into a tree in the second half of this year, after the monsoons, literally and figuratively. A bunch of things we need to watch out for. The stock, remember, is at a near 52-week high, trading at 55 times 1 year forward earnings. The street is anticipating 5 to 6% volume growth this time, with 180 to 200 basis points gross margin improvement, because the raw material environment has turned a little favorable for them. This time around, more than ever before, we'll be watching out for management commentary on a couple of things. One, rural demand recovery. Secondly, what they foresee going forward in terms of raw material inflation. And thirdly, most importantly, the strategy going ahead, because this is also the first quarterly results under Rohit Jawa's leadership. Put all these things together and add numbers to that, you get a revenue growth of almost 8.5%. Price growth will be lower than volume growth this time around, because the companies have been taking price cuts given the favorable raw material environment. You're looking at numbers closer to 15,500 crores on the top line. EBITDA grows a tad higher than the revenue. We see a 12.5% growth, which would mean that the margins of the company would improve by almost 100 basis points. 23.6% is what we're working with. And on the back of that, net profit grows around 14.5% odd. Unseasonal rains have impacted the ice cream demand in the northern part of the country, so that's something that will impact their summer portfolio. But the volume growth would be aided by grammage improvement, and gross margin savings will also be put back into ad spends and some price cuts that the companies will take. So to these extent, management commentary and what the numbers that the company report will be crucial this time around.
Okay, thank you very much for that. The other biggie we'll be watching will be Infosys. Reports numbers post-market hours. The press conference is scheduled around 4:30 p.m. It's expected to be a quiet quarter like we've seen with the others, but growth rates for Infosys is going to be more than peers. So dollar revenue growth at 0.8%, constant currency revenue growth of 0.7%, which will be better than what peers have reported. TCS, remember, had a flat quarter. Margins for the company are likely to remain flat this time at 21%. There is no wage hike for Infosys this time, so no pressure per se on the margin front. Profits will be up 1.1%. Guidance, the FY24 guidance. 3 months back, the company had said that full-year growth rates will be between 4 to 7%. According to many analysts, the company could trim the upper end of the guidance. Instead of 4 to 7%, they will say growth rates will be 4 to 6%. Maybe it's going to be an impossible task for them to achieve the upper end, which is why they could trim the top line guidance. Margin guidance likely to remain unchanged at 20 to 22%. What will the street watch? If you remember, Q4 was particularly weak for Infosys. The company had seen, projects being ramped down, projects getting cancelled, and not just in the BFSI vertical. They had seen it across. It was in manufacturing, it was in high tech, it was in the telecom sector, in retail. Secondly, there have been a spate of senior level exits. So even in the current quarter, there were 2 VPs who stepped down. One of them went on to become the CEO of QuickHeal, the cybersecurity head. So there have been some exits in Infosys. And is this impacting anything? Thirdly, the mega deals. Now, just 2 days back, the company had announced a large $2 billion deal. So some more clarity on that, how much of it is going to be net new, the outlook on deal pipelines, and fourth, wage hikes. Because the company typically gives wage hikes in April. They didn't give it this time. They deferred it. So the outlook on wage hike as well as employee compensation is something that the street will be tracking. That said, Infosys has seen a lot of buying ahead of its numbers. Today, the stock is subdued, but I think, and it's flat. But, since the earnings season began with TCS, Infosys stock has gained close to about 9 to 10%. Mayuresh Joshi, the head of equity research at William O'Neill, is with us on the show. Mayuresh, afternoon, and thank you very much for joining in. What have you made of the recent IT numbers that we had? L&T Technology Services, there was a miss on the top line. The company is holding on to its guidance, full-year guidance. You had an LTI Mindtree, again, slower than street anticipated in terms of the top line, and now the company is saying that we may not be able to do the double-digit growth that we had earlier aspired for. Numbers are just out from Mastech, Nugent. Some key trends that you've spotted from the IT earnings that we've had this week.
Afternoon, Rima. So 2 things come out very, very prominently from the IT earnings. One, I think the near-term weakness in terms of discretionary spending stroke client demand. Probably the stickiness surrounding that will get played out in the immediate quarters to come. And that has been a very, very obvious trend across IT companies, right from TCS to LTTS to LTI Mindtree as well. So I think that is one trend that might be a common thread across IT companies in general. The second element in terms of the discounting factor that has probably happened for the sector as a whole, Rima. I think everyone on the street was pretty much convinced that numbers would be very, very soft, and management commentaries would also indicate that coming few quarters might see disruptions both in terms of order wins and both in terms of pricing as well. So I think both these aspects was something that the street was playing out with. However, I think the commentaries have held out to be pretty solid so far. So I think what transpires in terms of the slowdown that is expected in the US in the third quarter or fourth quarter, which is typically the quarter which decides a lot of orders which flows through Indian IT companies, is going to be extremely critical. At the same time, how Europe shapes up, because Europe still looks very, very sticky as far as macros are concerned. And therefore, that market itself might be an outside risk for the sector as a whole. Having said that, again, I think a lot worse was expected. A lot more has probably been delivered by IT companies in general. And therefore, I think the momentum that we've probably seen in this sector has probably sustained itself. What happens with Infosys tomorrow might also direct to a large extent how the sector probably moves. So anybody holding on to the positions can probably hold on. But fresh positions probably still, in our opinion, need to be taken on pullbacks.
Okay, got that point. Mayuresh, hi, good afternoon. There's been, I just wanted to get your take on some of the consumer stocks. Today, of course, there's a little bit of selling that's taking place on some of the large cap names. Tomorrow, we get numbers from Lever, as Mangalam was just pointing out. How would you look at some of these big FMCG names in the portfolio? Would you be okay adding them at this point in time, or would you look at something else, maybe in the consumer discretionary space? I mean, you have the entire, EMS space. Which has been a far better performer compared to staples, at least in the last couple of weeks and months.
Afternoon, Surabhi. Oh, absolutely. I think some names within the EMS space have done phenomenally well. You have a look at what Keynes Technology has done, as an example, Avalon Tech as well. And therefore, the entire addressable market size probably is very huge over the next few quarters. And therefore, I think almost a 3 and 4x kind of a market size gains can be estimated for these companies in general. And they probably delivered in terms of order wins, in terms of execution itself. I think consumer discretionary as a theme comes into our sector rotation graph very, very clearly. I think this is one theme that can probably still play out from an earnings perspective. When it comes to specific FMCG players, and as Mangalam was mentioning in terms of expectations from a behemoth like HUL, mid-single volume digit growth expected. But for the universe as a whole, input costs are clearly going down. Discretionary demand, specifically from the rural side, is expected to firm up. You'd already seen green shoots a quarter ago. This quarter might be a sustaining quarter because monsoons have resumed. And if monsoons probably remain on track for the remainder of this season, consumer discretionary spending, specifically in rural areas, will make a comeback, which will aid significant amount of volume growth. Urban spending has probably held up, which probably means that the overall volume growth in the second half, with these conditions being met, should be very, very good. Having said that, with input costs coming down, I think clear operating leverage played out. Valuations always been expensive, should be for the players as a whole. So for HUL, I think we'll watch out for numbers, key pivot levels of 2,750. Nestle remains on our focus list. Tata Consumer remains on our focus lists. And our take is that if this thesis plays out, the second half will be extremely good for these players.
By the way, look at the markets go. It's back above that 19,800 mark by quite a margin. It's 19,840. On the Nifty, it's up close to about 0.5%. The mid-cap index has surged close to about 0.7%. We're practically, I think, in record levels now. Again, we've just hit it in the last few minutes. 18,842 is the high on the Nifty now with the up move that we've seen. And some of the key contributors include the banking names, particularly PSU banks. So State Bank of India, PNB are higher in trade. ITC, a stock that we were earlier highlighting. ITC is up and about. Reliance Industries has started seeing buying. That surged close to about 1%. Bajaj Finserv has rallied 2.5%. Mid-caps too moving up in step, and the advanced decline ratio is now firmly in favor of the gaining side. So there is this last hour rush, to buy for our markets. Get into a break. We'll come back with more.
Welcome back. What a market this is. We're going to end virtually at the high point of the day. One would be disappointed at the start because we started off well in the green and then there was some profit taking. But the good news is maybe the final tick will be at the high point of the day. That appears to be the case today. And the mid-cap index, that's outperforming the headline index. You like the look of that as well. Mayuresh Joshi is still with us. Mayuresh, let's talk about PNB. What's your view on the stock? I mean, the PSU banking names itself. And PNB, it's up close to around 5% today, moving on high volumes as well. Any view on the stock?
Generally, Nigel, very good afternoon to you. I think the space is doing exceedingly well. We've added a couple of names within this to our model portfolios, Canara Bank and Bank of Baroda to be very, very specific. Punjab National Bank obviously has its own flavor along with the entire index as a whole. But for the sector as a whole, I think Bank of Baroda probably still remains one of the favorite picks for a few reasons. Even if NIMs compress from 3.3 odd percent, it is going to be still very, very robust. Their SMA2 book is still very, very manageable, less than 1%, expecting very strong credit and deposit growth coming through. And with the kind of PCR and capital adequacy that they've got, I think balance sheet strength should keep on picking up, and it meets most of our parameters on CanSlim. Similarly for Canara Bank, I think the numbers are yet to be declared. But generally, I think if you probably look at the trend, I think the trend should continue in terms of asset quality pressures coming off. You're probably expected to see NIMs being very, very stable on a YOY basis. And therefore, I think the expectations that one has in terms of the valuation matrix as well, valuation still very, very supportive at this juncture with the expectations of earnings expansion coming through over the next few quarters, should hold these banks in good stead. So no particular view on PNB, Nigel, but Bank of Baroda and Canara Bank is something that we like.
By the way, just take a look at the market. What a sharp uplift we've had. And now we're practically going to be ending at the highs of the day. 19,837 on the board, almost a 90-point rally and counting. And a large part of that thanks to Reliance and the move that the stock is now making. About a 1% gain on Reliance. The intraday charts will really tell us the story. That's the Nifty. So if you pull up Reliance, some of the others as well, actually even ITC for that matter, pretty smart moves as we are getting set for close. Mayuresh, so before we thank you, tomorrow is the big event. The demerger finally happens. What value would you ascribe to the demerged RIL and also to Jio Financial?
So to large part, I think RIL's value will be determined by financials value as well. And anywhere, I think the estimates that all of us have on the street is anywhere between 160 and 200 odd rupees. And to a large extent, also, Surbi, I think Reliance numbers are due on Friday itself. So a large expectation is also getting built up over the next few quarters that the gas part of Reliance's business expected to hold up very well. GRMs will hold up for RIL, and retail businesses obviously contribute significantly to EBITDA, not that much too bad, but that contribution should continue. So I think the financial services arm anywhere between 160 to 200 odd, and therefore I think what probably happens with Reliance with the adjustment would get paid out, but numbers over the course of the next 4 quarters, specifically from the gas division, even the O2C business should hold out very, very well.
Okay, I think we'll leave it there, Mayuresh. Good speaking with you as always. Thanks very much for taking out the time and being here with us today. Well, I think, no questions in terms of what did the trick for the market. It is a combination of Reliance Industries, ITC and Bajaj Finance. I mean, those 3 names in the last about 40 minutes. The rally started about 240 or so, and it never stopped. We're up 90 points on the Nifty. And I think about 40, 50 points, basically. The incremental addition came from just these 3 names in the last 40 minutes of trade. So that's the market for you. The mid-cap and small-cap indices end higher, but they were higher when we started as well at 230. So there was nothing incremental there. But the real change came through on the Nifty index. Banks also, by the way, when we started at 230, that index was doing well. It was up 0.5% or so. But not so much the Nifty, and there these stocks that I mentioned made all the difference. 19,843 on the Nifty. We'll run you through many stocks. 1,400 stocks higher and 900 stocks lower. So market breadth clearly positive as well. Rima.
NTPC is your top Nifty gainer after that Goldman Sachs report, so that surged in trade. Innocent Banks who are buying post its numbers, stock higher by close to about 2%. On the losing side, you had HUL. Numbers are tomorrow, but the stock closes a bit subdued. That's down 0.5%. TCS came in for correction for the second day in a row. And a couple of the auto names. Autos have had a fantastic first half, but over the last few days, names like Hero MotoCorp, Bajaj Auto, Maruti, Eicher Motors, they have been struggling a bit. But I think still the auto index will be one of the best performing indices for the year so far.
Absolutely, autos have had a great ride. But today, of course, it was more about some of the power names, like you mentioned, NTPC. Just very quickly talking about some of the movers and shakers in terms of the news flow. Polycab has added another 4.5% today, so big mover there. KEI is the other one that managed a pretty good show for itself. Talking about some of the key names beyond news. Then here we have Titagarh Rail Systems. The gain is almost 11%. And news is really a brokerage note. HSBC sounding very optimistic. Their starting price target was above 700 on the stock, and today Titagarh's closed at 600. SJVN obviously on the Goldman Sachs report reacting quite well. Some of the rice makers have had a good session today. KRBL, LT Foods doing pretty okay for themselves. PNB, Indian Hotels, some of the other names on the upside. So not a bad day for mid-caps either. All in all, we are ending with a near 100-point rally on the Nifty right at the day's high, and the mid-cap index also looking quite smart with a 0.7% increase. So a good-looking green screen on a day that belongs to the bulls.
With that, it's a wrap on Closing Bell from the entire team. Thank you for watching. Don't go anywhere. Our special offering, Man About Markets, comes up next.